Welcome back to Sikora Success. This is episode 3, season 2. We're doing them in person now. So today I have two good buddies of mine, Ralph DiBugnara and Jeff VanNote. I'll let you guys give a little bit of background on, like, just so people can understand, you know, how experienced both of you are in this game. And then using that, we want to go into a little bit about what we're seeing in the current market.
You want to go first?
I'm just going to take a quote. I mean, Ralph said I was unapologetically innovative.
That's true.
And that's how I'm going to leave it. Ralph, you're up.
I'm doing this since about 2001, really mostly through mortgages and my own real estate purchases. I've gotten a little bit more involved in some other stuff in there, but I'm in the business since 01. So I went through 08 and the crash and all that crazy nonsense. And the last 2 years of craziness I've gone through. So between making a lot of buying mistakes and then a lot of mortgage mistakes, I've really learned mostly from my failures. But I've known you since 13, and you're in the business since when? 07, yeah. So
I was 20. I couldn't even have a legal drink. And I was in Bronx with a bunch of Dominicans, and they were asking me to take shots, and I'm sitting there like, I can't even legally drink. Like, I'm 20, guys. I can't have a shot of Brugal right now. You know? I didn't have a shot of Brugal.
I was going to say, I feel like that's probably why you were a successful loan officer, because you weren't the one just drinking at all those events.
That was part of it. That was part of it. Aside from giving myself the challenge of really succeeding at 20. Everyone was 45, 50 years old, negative, down and out, and no one liked working. No one liked respecting people or like truly focusing on relationships. Yeah. So for me, I just took it as a big challenge.
Yep. Yeah, and I feel like that's why we're here. I mean, he met you in 2013. You said I met you in 2014.
Yeah.
Devil's tickets too. If anybody wants to get to my heart,
no more, man. I don't give tickets out. I don't spend money on people. I just focus on relationships.
But that's the way to get to you is Devil's tickets.
But that was fun, man. I mean, even like the suite that we did, that was a good time. We had
Weekend?
No, it was
Kevin Hart, Puff Daddy. Oh, it was the Puff Daddy concert.
Daddy, yeah.
But again, so I think when people try and like lead for relationships with money, right?
Yep.
And while you know what, the company I worked for had Devil's tickets, season Devil's tickets, I offered them to you because you liked hockey. That wasn't me like buying your business or buying your friendship.
Yep.
Like, I genuinely said, like, you like hockey, we have Devil's tickets, go to the game. And then fast forward 2 years later, I dropped like 20 grand on getting a box for the Puff Daddy Mace Bad Boy reunion tour, put 30 people in a room, and I didn't do it to get business. I did it to just nurture my relationships, right?
Yeah.
So I didn't just take 30 grand and throw that hope in like something would come of it. I reinvested that money in an experience. I think that experience, part of that is what carries my relationships forward, 10, 15 years down the road.
And that too, the people that were in that room, those weren't new clients. No. Those are the people that we're already doing business with and everything.
Real players.
And I remember like a differentiator when we first spoke. Yeah, it was. I joke. It wasn't the Devil's tickets. It was, you were saying, send me your worst freaking deal. Send me your shit deal. I sent you so many shit deals that you actually, at the end of that, I remember you saying, can you give me like an easy one?
Like, I never asked for
give me one of those layups.
Let's just tell the truth, though. The truth is, the reason why we're still friends is because your wife met Victor Cruz right before the concert.
And I wouldn't have known it was Victor Cruz either unless I posted it on my Instagram, unless he was like, that's Victor Cruz right there. And then Kara ran up. She's a huge Giants fan. And took a picture. And
that was at the concert too?
Completely forgot about Brett. She didn't even know Brett was there. She saw Victor Cruz and she started salsaing.
This is the problem with Jeff, by the way, though. Jeff, that's what Jeff thinks. He's like, give me the most difficult thing you possibly could imagine giving me. And then he's like, hey, just so you know, this deal shouldn't be getting done, but we have to get it done, and it's got to close in 2 days. It's like, all right, great.
Get it done, dude.
Well, then we carried that through private money, too. That same mentality where it's like, I called Jeff up. I'm like, hey, I want to buy that house or that two-family, but I need to tap equity over here, and I need to do, and like, we did some very creative financing that we, prepaid payments or rolled them into the back end, like stuff that really works well for developers.
Yeah, I think, and I hate saying how it's sad, and I always say, like, guys like Ralph and myself in this industry, it's very easy to stand out because we're consistent, we do things the right way, we have pride, and we keep our word, right? And we never tell you something that we can't do. So, yeah, while we may stand out or be considered towards the top half of the industry, whatever you want to call it, it's mainly because of our work ethic, but also because of how poor the people come into the industry and how they don't take the time to actually learn the industry, form relationships, no guidelines. They come in for the money. And while we are in it for money, for resources, and provide for our families, we actually care about what we do. And we care about the people we deal with.
Yeah, this is one of those periods, right? Where it's tough, where it's business is down. People are starting to question if they're actually good at their job anymore. And I'm hearing it from everybody. Like, last year was so great and now this year is so hard. But this is, and you know this too at this point now. I think you stay in this business through the lean times and through the average times for the pop years.
Yep.
And last year was the last 2 years were a year where the business spiked. But like you have to be able to maintain during these years to get the opportunity during those years. And like I think if you look at anybody and they were like, hey, you're going to have to make this much money this year, which is 25% you're going to make 4 years from now. But if you make that money this year, you're going to have a huge. Everybody would do it. Nobody has a crystal ball.
Yeah.
But that's what this business is.
No, and that's exactly what it is. And I tell people too, like a lot of people are getting, deflated, and they're starting to, they're feeling that burnout right now. And I'm like, you need to get back when you decided I'm going to be a loan officer, I'm going to be a realtor, and you signed up for the test, like the endless possibilities of income, freedom, all of that stuff that you were feeling in that moment. Like nobody gets a real estate license and says I want to make $32,000 a year and drive Uber to support
right.
That's not like
I want to show 8 houses on a Sunday.
You put the credit card in. That's not what you're signing up for. You wanted that. You want the vacations. You want to be in Miami. You want to have the Airbnb business.
Freedom.
You want to have the world.
Yeah.
So I tell people, get back to that mindset and make sure that you're always operating in that like level of joy, and get back to the basics. Get back to those deep relationships with people. I see, dude, I haven't sold a house in over a year or whatever. We just sent it out to the teams. I still just get calls all the time from past clients that I'm bad. I will admittedly say I haven't talked to this person in 8 years, but I was able to make such an impression on them back then that they're calling me to ask me who I know in Orlando because they're relocating.
I had this conversation with my team. That's a great point, because I make this conversation with my team last week as far as their customers go, whether it's a new customer or it's a past customer, what do they find value in, right?
Yep.
And if they find value in the person you truly are, and that's valuable to them, then it's like you just said, they still call me 8 years later because they found value in what our relationship was. But if you make it something that's transactional, it's only based on the lowest rate or the lowest fee in the market, then that's all their value really was, and they don't return. So I think that people don't realize when you're willing to reduce yourself down to just get the business in, for whatever that is, like you don't take pride in what your time is or your value is, that's usually not going to be something that's going to be fruitful in the future, because they're only valuing you for what you are, what you can provide in that moment.
Yep.
So it's like, that's where the discount broker stuff comes in.
Yeah, I think, like me personally, I always had the belief, and this is like what I've realized. I didn't realize I was doing at the time. It was just how I built my business. For the first 10 years of my career, I met not only did I meet every single person in person, right?
Yep.
And I say every single person that I could meet in person. Obviously, if you were in Florida, I'm going to take a flight down, right? Every single person in their house, on their territory, or in my office, face to face, meeting one. And I had the belief that if I gave you all myself for an hour, 2 hours, 3 hours, 8 hours, right? Whatever it took.
Yeah.
It's a true story. My best client today, we sat in my office for 8 hours. It was going to be a 45-minute meeting. He's my best friend today. Done 12 mortgages for him and his wife and everything. Baby mama, significant other, whatever. Phenomenal people. That I'm going to leave an impact that, hey, I'm going to give you all I got my first shot.
Yep.
I'm not going to follow up with you because I know what I have. You need what I have, but other people might have what you think, right?
Yeah.
But you're going to call me if we're the right fit. If I don't impress you or I don't tell you what I know in that time frame, you're never going to be happy or pleased with me. And I made it so purposeful to be present and give them everything, A to Z, help them fix their credit, whatever, give them advice. And that's why, even when I took 2.5 years off, 3 years off, whatever you want to call it, because that's how long I took off, my phone rang more then because I had thousands of people that I helped or family members that I helped and didn't ask anything for, and I went to a free meeting. Hey, here's an hour of my time. And it paid dividends a year later. So I always say, like, yeah, you know what? You might have to sacrifice 10 years. I did it from 20 to 30. I sacrificed every single other aspect of my life to build my career. But in that 3.5 years or 2 years, whatever the number is, I still don't know. I try not to think about it, that I didn't work. My phone never stopped ringing.
Yeah.
Well, I think that both of you too, what you've done really well is you're both connectors, and you know a lot of people, and you help people connect with other people that don't benefit you in any way, shape,
Isn't
or
that
form.
the game though?
But
not for everybody.
But
right?
You're one of the best that I know. Like, I need a wallpaper guy. My HVAC's down. Anything you can think of. Brett, just copy you a text with this guy. He actually doesn't even wait.
No, he's great. No, he
right into it.
Yeah, he does it. He's done it to me before. He did it to me with Brad Lee. Actually, we was talking about Brad Lee, and he did it so fast that I didn't know I was on the phone with Brad Lee. He's like, "Hey, Ralph, my friend Brad's on the phone." I'm like, dude, I'm at my son's baseball game right now. So I think I didn't blow him off, but I was like, "Hey, Brad, you think I can give you a call later?" And then I got the phone. I was like, "Who was that?" He's like, "That was Brad Lee." I'm like, "Dude, I had no idea who I was just talking to." But that's who Jeff is. Jeff's like, he does it like that second,
right?
You know, like so, I
you know what I learned? So how I've always been that way, right? And I don't want anything for it. I want to help people because I know what it's like not having help or support or having 10 issues that I have to solve all on my own.
Yeah.
And sometimes I just wish somebody would be like, hey, let me solve this problem for you. But it's also made me who I am, right? So like how I'm able to see a problem, diagnose it, and solve it in a blink of an eye. It's because I was always under fire since the day I got into the business.
Right.
And under siege, under fire, whatever you want to call it. So when literally my whole life was burning for 10 years, you know, because of things I got myself into, businesses, this, that, the mortgage business alone, I had to solve problems quickly or, you know, the house can burn down.
Yep.
Yeah. But I mean, listen, you know, during times like this, and I've said this, especially recessionary periods and all this other stuff, right? You want to double down on the stuff you know best, I think. This is where I think it is. Like, the stuff I know how to do the best, I want to double down on that. Like, because it's easier to navigate choppy waters when you're doing something you know every single day. And I just want to be consistent every single day because it's hard. It's hardest to be consistent when business is down.
Right.
Because you're like, screw it.
Right.
I'm just going to go do this.
It's easy to do nothing.
It's easy to do nothing. But when I did nothing, in between 07 and 08, I didn't do nothing when the market crashed, but I was like, screw this. I'm going to take a guarantee. I got 2 different companies to give me guarantees. They both subsequently closed in the next 12 months. But like, just so I didn't have to do anything and I could pay my bills while the market was crazy. I was like, I'm going to do nothing. I'm just going to wait until this gets out. But the problem was it didn't work.
Yep.
It dulled my skills because I wasn't working every single day. And at the end of it, I still had to go back to doing the stuff I didn't want to do.
Yep.
Except now I was further behind. I was further in the hole financially. I just made it worse by not doing something every single day.
Right.
So like when COVID happened, at first when they shut everything down, I viewed it as the same thing, even though it didn't end up being that. But I was like, this is the same thing. It's going to hurt the mortgage business, all this stuff. I was like, all I want to do is just not freeze.
Right.
Like I just want to, like whatever I'm going to do, I'm going to move forward. So I think here we are again, right?
Yep.
Market is down. People are losing money. People aren't sure if they want to buy houses. This is the best time to be in.
Yeah.
It really is the best time to be in. You just have to be consistent with it. And if you're consistent with it, the momentum you have coming out of it will be so supercharged that you'll be ahead of everybody. But you gotta have to have the fortitude to kind of get through it.
I think having, what I've learned is having the right people around you and people you surround yourself with in general. Like there was a quote the other day, and I'm probably gonna butcher it, but it's like I had people that were in my circle but weren't in my corner. Yeah. Right. And when you think about like how I get chills saying that, and obviously I know you like boxing and everything, like having somebody in your corner is invaluable. And there's so many people that want to be in your circle for the wrong reasons, but if they're not in your corner, they got to go. And I think we're often fooled by, we want this person to like us, or we want 10 people to be our followers. Well, they might be dog shit followers. What do you want them to follow you for? They're only looking out for their best interest. Like when you call them and just say, hey, do you mind like coming to my free event? And like they can't even do that. Like, you just got to really hone in on that. But I'll tell you a funny story. So I've lost hundreds of thousands of dollars into businesses, ventures, partnerships, friends, you name it. Right? Probably more than that, multiple hundreds of thousands of dollars, which obviously you know. And I opened up a 401k when I moved over to Cardinal last year. And I obviously maxed my 401k out every year. I set the same amount every month. So January, put money in, down. February, put money in, down. At one point, and again, I had like 10 grand and whatever. I'm down like 22%. Right? I'm down $2,200. Yep. Like, if you gave me a challenge right now, I'd probably give you $2,200 to accomplish it and not even think twice. I could give 2 shits because I control it. Right? Yeah. So I'm sitting here, and every day I'm looking at this stupid 401k down $1,800. I'm like, is this a fucking joke? I'm so mad. So finally, as of today, because I stayed consistent, I said, look, I'm going to put the same amount of money in every single month, like obviously dollar cost average, because my best friend at Goldman said the market's going to end up by year end. So we're in a buying period right now, right? Yeah. So I stuck to my mentality as much as I wanted to cut the 401k off, as pissed as I was being down $87, because I'm not managing money. If I'm going to lose my money, I'm going to lose my money. Yeah. I don't want someone else to lose my money, right? Yeah. I give you my money so I don't lose money, right? But it's just funny how to show you, right? Yeah. So finally today when I log in, down like $50. You would have thought I just hit $1 million lottery ticket.
This is back.
I'm back. Yeah. One more update, I'm positive, right? But it goes to show you like perspective of how, like, again, I had no problem spending $10,000, $15,000, $20,000 in a blink of an eye. Yeah. I spent $13,000 a month on my technology company. Yeah. But being down $1,800 on my 401k, I lost sleep over that.
Yeah.
But crazy. It goes to show you, like, invest in what you know and stick to the plan. Like my plan was put the same amount of money in every month, and regardless, over 15 years, I'm going to end up being up, 10% year over year, because that's what the law of averages in the stock market show. But I didn't. get panic and get away from my plan.
Yep.
I could have easily done that and said, you know what?
You're right.
Just give me the money. I'll trade options and make it back in the day.
Yeah.
No. I'm going to stick to the plan, not change it. If anything, I up my contributions.
Yeah.
So I tell that story because you can very easily get honed in on the wrong things. I'm worried about losing $87. I'm working on a deal right now where I'll make $100,000 on one deal, but that $87 is that thorn in my side.
Yeah, but you're right about it. Just to stay consistent with it. You did the right thing.
Completely.
But if you look at the market in 2008 when it crashed, I think S&P stocks were down like 30% that year. If the people who invested in 2008, I forget what this was, it wasn't a lot of money. It was like $100 a month or something like that. That $100 a month ended up being like $20,000 by 2010 because it multiplied, and because the average, like S&P 500 and NASDAQ 100 stocks, right?
Yeah.
Every single year they've been up forever, right? They're always up. So 3 months ago, I went to everybody in my office. I was like, just if you guys don't want to do that stuff, just put money into Amazon. It's splitting. Just put money into Amazon. I still believe this. I could be completely wrong, but like, you got to look at the lower averages. I won't give the person's name, but I want to bring this up. I saw somebody put a video up the other day, and they were talking about the market crash. And they were like, the market crash really started in this year, not in this year, all the stuff, right? But there was no, this is what I said to you the other day, there was no historical facts behind this. So then you're pushing fear, but you don't really, either you don't have experience. If you have experience with it, it's a different thing. You talk about your experience. But like, if you can't talk about your experience and you don't have any historical facts about it, then why are you advising people on what it was and what you should be doing with it? And I think that's part of the issue we're running into now. Like,
completely.
If I don't know, I at least go look up this data.
Right.
Yeah.
How's this 20-year-old girl who dances at a strip club telling me the market's going to crash? I'm like, market? You better worry about that pole coming off the wall, girl. What are you doing? I'm being honest with you, right? You're a 20-year-old. You live with your parents. And you're telling me the market's going to crash? Well, I'm confused here. I don't tell you how to dance. Don't tell me the market's going to crash.
That's like I jokingly said. I think it was 2018 in like the first big crypto boom or whatever. That there's a guy at the corner gas station that's also a financial planner around
100%.
Crypto. So if you need any
100%.
advice, go to 14th and Washington in Hoboken. But yeah, no, my father-in-law is a financial planner, and does very well for himself. And I remember asking him like 2 weeks ago when the market crashed in 2008, 2009, did you go and buy heavy? And he goes, no, I just stuck to my plan.
Yeah.
He goes, I just stuck
to my plan.
I kept doing what I was doing, and I kept telling my clients to do what they were doing. Because when you start hammering money into something like that at that point too, and you predict that the market's going to come back up, and it doesn't, you're screwed.
Yeah, over leveraging. Yeah.
Right.
Yeah.
So that kind of goes back to the whole thing. Whereas I'm golfing this afternoon with a realtor that came to me and said, hey, listen, I did 20 million last year, and I'm dried up this year. What am I doing wrong? Well, I'm going to go back to what he did to do the 20 million the year before, and I guarantee he doesn't have to do anything different than that. He just stopped doing it. He fell off of his plan because he was making so much money in what was an easy market.
Very easy to get distracted. I think part of this.
And 21 was not an easy market either. It's like
no,
they
it wasn't.
had it in their head that it was.
It wasn't. You're right.
2020, 2021, like people were
very
grinding. People were working 80-hour weeks.
Yes.
Well, it was just easier because it was busy, so they got distracted by it.
Everyone wanted to buy or sell.
Yeah.
Right. There was income at the end of what they were doing when
100%.
they were burning the candle for both
That's why I
ends.
think it's so important, and I know I do this frequently. It's so important to enjoy reinventing yourself. And I always say, like, I don't reinvent myself. The market reinvents me.
Yep.
As much as I'd like to reinvent myself, like I am who I am, but I could also have fun creating a new brand or a new strategy. And again, the market does that. You just have to be aware of what the market conditions are and where the market's heading to have fun recreating the Brett Sikora superhero or getting into commercial. And if you don't keep looking for that growth and evolution, you know what? You're going to become miserable 45, 50, 60 years old doing the same thing all day, every day, and then wonder why you're not happy with yourself. Because you haven't grown since the day you got into the business. Yeah, you might have made millions and millions of dollars, but did you really use your creativity? Did you really focus on helping people? Probably not.
Yeah, I mean, listen, I just the waves. You know what I mean? Like the way, this year has probably been the toughest year in financing for me personally since 2008. I would say, you know what I mean? Because business is down. There's the mortgage companies have a lot of money from the previous year, so there's a lot of recruiting going on through money. So it's like, you kind of feel like you're fending off everything on every angle, and CFPB audits, IRS audits, the mortgage business made a lot of money last year, so now everybody's looking at it.
So now take it back.
So it's just, but this is where there's a learning experience for every single aspect of your business. You'll learn how to do it better because you have no freaking choice, right?
Yeah.
I just think that this will be the biggest growth year for everybody. Screw last year, this will be the biggest growth year for everybody if they do the work this year.
Yep.
But I just think it's hard to, and I have to tell myself that every single day too. It's not like, I have to go up and do it myself every single day. Just keep doing it. You know what I mean? Like, because you're going to grow this year. But every single time I've been in a place where it was a straight line up for a long period of time, there was a big drop coming at the end of it.
Absolutely.
And it's inevitable. So I think you just have to understand that's going to happen. It's got nothing to do with you personally. Just you ride the wave. I just think that even sitting at this table with you guys, I think we're positioned better when it's going to be good again, right?
Right.
Completely.
So it's just like, you said it before, like keep the right people in your corner, but just surround yourself with the right people, do the right things every single day, and inevitably you will be successful the same way you were before. Like you're going to coffee with this guy together. You know what I mean?
And the nice thing too with it is it's so interesting how many people, regardless of what they're making, are still paycheck to paycheck a lot of times too. True. So you only need like a 90, 120 day window of them kind of freezing up to have 50% of the LOs to drop out of the game. Right. 50% of the realtors drop out of the game.
Completely.
And then all of a sudden, if we look back at 2000 and I think it was 2008 was the biggest in the United States. I could be wrong, so don't quote me on this, but it was something like the transaction count was the highest behind 2006.
Can we fact check that?
Yeah, let's definitely.
I think he's right about that.
Should we buzz the IRS on me? And, let's get me audited in every way. No, but I remember hearing that, and I think it was 08 behind 06, or it could have been 09 behind 06. You wouldn't hear that on the news though.
No, you're right.
And so if you tune into that whole side of things, or you're sitting by a water cooler, there's people running laps around you. And doing deals and making money and connecting deeply with clients where you're just, in this
but even
social media makes it even worse.
Even worse, but it's even furthermore, like crypto got killed, right? NFTs got killed. Like a lot of the stuff that collectibles have been a big reduction. Everything is down. So it's not just real estate down, everything's down. But if you look at real estate's down the least. So even if real estate's down 20%, it's still down less than all the other stuff is down. So I'm not saying that other stuff is bad either. I still think there's value in other assets to invest in. I'm saying that real estate, in my opinion, has become gold. It has become treasury notes. It has become the more conservative long-term asset that it's gonna be less volatile than some of the other stuff in the market. Yep. And I don't know if I'm right or wrong about that, but that's the way it looks at this moment.
Look, as long as there's financing available for real estate is still a sexy appeal. People have to live somewhere. People want to give their families everything. People want to live in a comfortable environment, right? So like, the only thing detracting from real estate is what? Maybe the cost of it, but you could always go find a cheaper piece of real estate somewhere.
Just like we were talking about, you just came back from Captiva Island with your son. I was talking to Megan, who works for us this morning. She lives in Lake George. When you hear people talk about their homes and where they live, it's a passionate thing. I was like, how was Captiva? You're like, unbelievable. Like, it was great. There was this, and that. Like, people can find passion in where they live and stuff around their house and stuff like that. Like, it's very hard to find that anything else. You don't find that in stock. You don't find that. Like,
that's pride. That's why homeownership is still pride in America, and that's why, like, even if prices go up, like, I never heard a Latin couple in the Hispanic market ever complain about a home price because they still have pride. Like, that's still their dream.
Pride in ownership.
And they'll pay for their dream.
Yep. And that's why you need to make money in real estate too, and so you can actually purchase the things that you deserve, the things that like you actually, so you walk into your home like, and it has that feeling behind it, or you can go on vacation and be in an Airbnb down in Florida and have that feeling, that experience of like, this is nice.
I think I went through a lull for a while in buying properties just because I got killed and then I came back and then I started buying heavy again the last 3-4 years. But like, I can have a better conversation within my business when I'm actually buying things myself. It's harder for me to have that conversation and understand the psyche of it because even as people within the business, when you buy something, you just bought a house for yourself. It's still a stressful process. It's not an easy process. It's hard for us too. So it's like you can understand it a little bit better going through it when you actually do it yourself instead of just telling somebody how to do it.
You get the pulse of the market. I think that's why I love what I do is I deal with everyone from the guy at the gas station on 14th in Hoboken like, telling me about crypto who wants to try and buy his home, right? All the way to the 100 millionaire on Wall Street, right? So getting everyone's kind of perspective and then like weeding out what I believe and what I don't believe. But one thing I'll tell you is what I've done recently is the public is always wrong, as we know, right? The media is wrong, the public's wrong. So the fact that everyone and their mother who's uneducated saying the market's going to crash, that means the market only has one way to go. It's up. And the fact that people are saying interest rates are going to 8%, I knew for sure they weren't right, and they couldn't go to 8%, right? So like, you got to put into perspective where the information and news is coming from. Most people can't think for themselves, and that's been proven. So all they could do is read headlines and share headlines without any meat behind it.
The problem with this, it doesn't happen, right? If there is no crash or if there is no
Right.
whatever happens, nobody's penalized for saying it.
Right.
There's no nobody even remembers. Like I just saw Jim Cramer say yesterday.
Unless you're like a president.
Yeah, you're 100% right. I saw
Not even.
not at this point. Yeah, I saw Cramer say yesterday that he's like, when I said that inflation had topped out last month and all the newspapers killed me, where are they now?
Yeah,
Because it really he was kind of right about it. It seems like it's topped out. I hope he's right at this point. It seems like it's on the other way. But you could say anything really.
Yeah.
If you're wrong, nobody holds you to
Everyone's
it.
got a
If
short
you're
memory.
right, everybody's got to show memory now more than ever.
That's why I like putting things in writing blogs and doing videos. You can actually go back and be, look, I wrote this article in 2016.
Yeah.
Yeah.
You told me I was wrong. Wait, here we are 6 years later. Hey, I said this on a post back in 2009.
Gary Vee does that all the time.
Yeah,
too.
he goes back.
absolutely.
But he has so much content that he's
Yeah.
just
He
plucking.
leaves out the stuff he was wrong on.
Yeah.
And he's just shooting.
I think,
You're right.
I think the key is just being consistent, and I believe, like, look, if you make a statement, have facts to back it up. Just don't make a statement. Like, don't make a headline.
Yep.
If you have a theory, you're right to have your theory. You're right to have your voice. You're right to have your opinion. But come with educated facts.
Yeah.
And I 1,000% agree with you too. Where like I bought my home last summer because I had a kid. I needed, and we had a second one on the way. I needed more space, so it was driven by necessity. And I knew that the market could shift up. It could go one way or another. To me, that felt like the peak of the market last summer. I didn't think it would have continued to climb.
Yeah.
It really felt like it was like, all right, this is gonna. So
I felt the same way.
I was able to make that decision based on needs for me and my family and based on that experience. And then with that, I can have that conversation with the consumer. Like, I fucking did it.
You're right.
Whereas like same with you. It's like, I've done Airbnbs. I've built new construction. You've done like, we've been in so many different things. And yet I find so many realtors too that they've never even bought their first home. So like that should really be
How could you advise somebody if you've never done it?
You're right.
And you could, because I did it for years. I didn't buy my,
You didn't know
I bought my
everything.
first home in 2014. So like I have 7 years. I faked it till I made it.
Yeah.
But I consumed as much information as I possibly could, and I'll tell you that those conversations get a heck of a lot easier when you're actually in the game with them.
Yeah,
You can't fear experience.
Yeah.
You can relate,
know?
Yeah. Well, listen, even prices coming down, like going through that, where prices were super reduced and all that stuff that happened. I could talk about a property that I bought in 2005 in Florida in Naples for $230. It was worth in 2008 like $70.
Yeah.
I had no choice but to keep it because I didn't want to give up my license. I didn't want to go to the bank, so I kept it. Property's worth like $310 now, and my mortgage is paid off, and I make money on it. So that's a good and a bad example. But for me, it's an example of like, look, I was able to outrun my mistake of buying that property because it was a bad purchase.
Yep.
By being able to stay in it.
Yeah, but listen, everyone else hears the difference, right? And this is like what makes you who you are, and your pride and your brand is like you didn't walk away because you made the wrong decision. You've tried to hang on and you figured it out. 99% of the people, which is why Florida took the path it took, is because they all walked away from their second home, vacation home, and every other opportunity.
And they have all their eggs in like one basket too, net worth wise, where I feel like everybody owns their primary resident and they want it to be an investment for them, and yet they're not investing in the things that actually make money in this business. Whereas if you own, if you buy a new property every 3 years or something like that, or let's use Hoboken as an example, I'll see $1 million 2-bed in the Hudson T as their investment. And I use this as an example all the time. They've got $5,000 coming in a month. They're upside down $6,000. They're $600, a month or something on it after all expenses, and that's their investment. And they're hoping for appreciation. Whereas had they just taken that $300,000 that's tied up in that and put it in the S&P in 2016,
put it in hard money, you make $3,000 a month.
They would literally they would have built so much more wealth. But if you want to be in the real estate game and you want to be in Hoboken, then take that and go buy $300,000 1-beds in Hoboken. And then you can have one vacant. Your rent's not $5,000. Your rent's probably $6,000. Your expenses are lower because you're not in a doorman building paying that. And like just kind of thinking of it in a completely different way.
You're right. You have to change the way you thought. Like some of the areas I'm in now that I have Airbnb properties, and I see that I have them on drips, and I see that a lot of houses come on the market. Right, price drops, houses come on the market. I don't view it as a bad thing. I view it as a good thing, and long term, right? Because more people are leaving the market. The people who are going to buy those properties are most likely not going to buy them for investment purposes. They're either owner-occupied properties or they're going to be their second homes. And I'm not getting into the Airbnb business now. Like, so for me, I'm looking at it as like, I'll use the Poconos for example. The Poconos, a lot of the owners smartly are taking their profits from the last 2 years and the increase in value because everybody bought up there and they're like, screw this, I'm getting out of here. But now there's a lot of houses on the market.
Mm-hmm. Yep.
For me, I'm like, all right, I'm going to go the opposite way. I could sell my house right now, take my equity out of it and do the same thing. Or I could improve my house so it stands out amongst the houses that are going to be left. And long term, I'll be ahead of the curve because I'll have all these reviews on the house. So I'm trying to, this is Warren Buffett, right? When everybody's running out, you run in. When everybody's running in, you run out. So I'm trying to take that theory even on my investments at this point now. And 2 years from now, we may be sitting here, I may be completely wrong, but I think that that's the way to go. Like to go against, I'm trying to go into the blue ocean, not the red ocean.
Yeah, I also think that down markets shake out the speculators, the amateurs, right?
Yeah.
So when you do hear of fear, think about the person that bought the house right next to you in the Poconos. I'll give an example. They probably borrowed $40,000 or $50,000 from a friend. They put $40,000 or $50,000 from their 401k. They probably quit their job. Yeah. Airbnb's down. They're not taking the Airbnb money to live off of. They're not paying their mortgage. Now they have to sell to try to pay their investor back, as an example.
Yeah.
So real estate's like that speculative game where, ooh, everything's great. You dip your toe, and then when you get in waist high, you see this shark brush by your leg, and you're like, I gotta get out of this water. Yeah. Meanwhile, it's like, shit, there's another shark behind me. I gotta go out that way. Let me swim away from the sharks.
If you can figure, I think the biggest exit strategy you can have is how can I have staying power in this investment for 5 to 7 years, right? Like if I can have staying power in this, and I think my biggest mistakes were always, like you said, like the 401k, right? If you just were like, screw this, I'm ripping my money out of this thing, I'm gonna put it into something else. Like the biggest mistake I ever made was when I emotionally panic out of fear made a move like that and either sold or whatever. So listen, I sold some houses that I shouldn't have got as much money as I got for them on the upside, and I got rid of some houses too early on the downside, and both were probably selling on the upside most of the time was luck.
Yep.
If I'm being honest, like you can't predict the top of the market. It's timing. It's very hard to time stuff at the top, right? So I got lucky in a lot of those properties, and the ones that went down, it was panic. So if I would have just stayed in those properties, I eventually would have found a good time to sell them. You know what I mean?
It's what I was going to say. You mentioned the 401k too. It just came up. I was going to breeze over it, but I had the brilliant idea of just not taking my first 2 paychecks and maxing it out in January. So mine just
my best friend did that. So Goldman. So again,
let it run for the whole year.
Yeah, I did the same thing, by the way. I was maxed out by February.
Yeah, but listen. So my personal opinion is, right, you have to go to the experts. I'm not an expert in that, right?
Yeah.
So when I spoke with Jason at Goldman, he got his bonus. They get the bonuses in January, and Goldman has a theory. Okay, if you have a one lump sum, let's say you have $100,000, are you better off putting $100,000 in one shot or putting $1,000 in for 100 months? And they said 100% in confidence, you put that one lump sum in one shot. So he took his full bonus from last year, put it all in. He's like, oh man, I'm getting hammered. I'm getting destroyed. But Goldman said it. Like, they're the elite.
Long term.
But then you do that every January over 10 years, and it all we're just in a bad year.
But you're right. But again, look, and there's no right or wrong. Like, you look at the laws of probability and history, and you know what? Per their research from 7 million years that they have tracked, put the lump sum in.
No, well, just like
I should work for Goldman.
Yeah, right. You're like,
I'm brilliant. I have great ideas.
So you look at S&P 500 stocks; they're up on average every year 10%, right? So if it's down 25% this year, by rule of averages, at some point it's going to be
has
there.
to come back.
And like that's what where I don't know and I'm going to make an emotional decision, I try to go to something like that.
Yep.
Like if this is this every single year, let me put in an index fund that has low fees, that's got a rate of return that makes sense, and just leave it alone. The problem is that I think Warren Buffett's rate of return for life is like 16%, right?
Yep.
The greatest investor of all time,
phenomenal.
16%.
It's still
right?
phenomenal.
But making 10% at this point, people are like, oh, it's only 10% of my money.
Not sexy.
That's a good investment.
It's not sexy.
It's a great investment.
Well, you have Dogecoin that returns $4 trillion.
Yeah, that's what I'm saying.
Well, that's the problem with like the realtors and the loan officers say they want that get rich quick feeling, and that's why people went so hard into crypto, because there were millionaires being made overnight, and that technically was easy because they were riding a wave where they would get lucky. We weren't covering, or people weren't talking about the guys that just took the absolute bath and that sort of thing. But that's kind of like the I've done so many investing. Man, you've been the lender on a lot of the things that we've done. And had I just taken my money back in 2014 and gone into syndications year after year, I'd be worth probably 10x what I'm worth today.
If you just did one thing.
But I was trying to be the operator. I was trying to create $200,000 every flip.
But
I was
at
trying
36
to
now?
Yeah.
Think about how valuable you truly are. You're worried about 10x. I mean, so again, like I look at, and I beat myself up more than anybody. So you go back to 2010, and I share everyone like this story. People are like, "Oh, you're a loose cannon. You're this. You're erratic." I'm like, "Okay, it's 2010. First of all, the mortgage business is still all jacked up.
Yeah.
Right. I'm 23 years old. I didn't graduate college. I played football. Right. I didn't go to class. I taught myself everything. I own 2 Liberty Tax franchises. I own a Remax franchise. I own 7 properties, 4 vacant, going through $250,000 of renovations, right? would you fucking behave properly?
Yeah.
You're a 9-to-5 employee that's guaranteed a paycheck every 2 weeks. Is it erratic, emotional?
Just the Remax franchise would drive me insane.
Yeah.
That's the only reason why I did that. I wanted to go out to Denver. I flew out to Denver. You know, I got a free ride out to Denver. But I share that, and I had employees, and I had processors, and I had guidelines.
You know the problem with that is that age. It's not the age, it's the experience. Like you said, you're not ready for it.
No. So you're never ready. I don't think you're
never ready. That's true.
You're never ready. That's a good point. But I tell you that because like I put all those monkeys on my back at 23, right? And now at 35, I walk around as light as can be because A, I'm still here.
Yep.
B, I accomplished it. C, I taught myself everything that I know, right?
Yep.
And now at 35, forget about what I could have been worth. Now I can go on a 15-year run that's, next level because I had that experience.
Right.
I'm not starting
You
at
went through
35 with a kid where, you know what, shit, like now I have real things to lose.
Yep.
Back then, I had nothing to lose.
But you can move a lot quicker too, and you know that those 2 Liberty franchises, those aren't worth your time that
Not
you have
worth
to
my
put
time or
into
energy.
them. Like all of it. And you start to say, I'm not going to do that. I will do this.
Right. It's interesting because I didn't even know you were 36, but it's interesting that even talking to you, because I know your history well, but you've done a lot. Like you had Airbnbs, you did flips. Like you've done every aspect of real estate at this point in your time in the business. So it's like you have a lot of experience on almost every strategy.
I tell people at my peak, I had 40 something. We were doing Airbnb arbitrage.
Yeah.
Got hit hard with COVID. Didn't have the reserves in the tank and stuff like that. So I can talk about that failure.
Yeah.
I know how I would do it differently and stuff going back. I had over 80 doors. I bought a 29 unit rooming house that had the zoning change on me and stuff. I've had buildings burned down where I've actually had to sue the insurance company because they denied the claim.
Yeah, you have a rich experience.
This is all scars.
Yeah,
this is all
it's
under
great.
here.
Scabs, not scars. Got scabs.
Yeah.
Still scarring.
Yeah.
But I've learned from that, and that's exactly what you're talking about, where it's like, I know that I got, so to me, at the 27-year-old me was more meant more money. And what I've learned now is let me do syndications. Let me invest with people who operate at a super high level, but let me make my money in my world, which is running a real estate team, recruiting and training agents, and that's it. And that's like
keep the main thing the main thing.
The main thing, and just keep adding zeros to
that.
So
I have, and you have this conversation all the time, and this is where, look at Jeff, and Jeff is a free bird for the most part because he's responsible for himself, and he puts himself. But there's a lot of days where I'm like, screw this, I'm just gonna go be me.
Yep.
I'll make money being me. I'll keep my properties and all that stuff, and I look at some other things and I'm like, well, that would be irresponsible for this, and this, and if I keep the main, if I just can get through the waves and keep the main, because the thing, and you can talk to this for sure, like the things you're doing that seem like they're sexy and great, they have their good days and bad days too. Like it's the same thing with everything else. Like no matter what you're doing, even though you're just responsible for yourself every single day now, all the projects you're working on have good days and bad days. It's never all the way up.
Yep.
So when I'm having a bad day in the mortgage business, I'm like, screw this business. This business sucks. I'm just gonna go do everything I've been working for on my own. I'm just like, that's not the smart thing to do.
Yep.
You know what I mean? Like I know how to do this. I know how to do this well.
That's where maturity comes in.
Yeah,
too,
that's
right?
true.
I mean,
That's
maturity
true.
and knowing like, hey, you know what? I'm having this irrational thought, or I'm having this moment of checking out, but I'm not, and here's the reason why. But those thoughts are normal, right?
Yeah.
And again, like, obviously working out, and I learned this, it's like nothing goes straight up and nothing goes like this, right? What I've also learned from working out and training at a high level is right when you're in those like kind of valleys, right? Like you're down, you're not as strong, you missed a weight by 3 reps that you just did 4 days ago, you're tired, you're hungry, you're hurting, right? I look at it now as like, I actually love valleys because there's only one way to go up.
That's
true. And a valley, like you can only plateau for so long before like, all right, rock bottom's rock bottom. Like unless you're going to drill this table, like you can only go here, right? You can't drop any further.
It's all the way up.
And then, okay, you know what? Like when in an airplane, we're just on an airplane with my son, when the airplane goes to take off, like you kind of feel that takeoff coming. And before you know it, you're 10,000 feet in the sky.
Yep.
So people that are experiencing that plateau or that low or that valley, embrace that and love that and be grateful for when you feel that those starting to come up.
Yep. 100%.
Yeah. That's good. I like that. I'm going to use that on like 10 people today.
It's true. I
the
always
good
speak from
news is
experience.
from here. Like,
Listen, again, I can speak from that from experience,
right about that. Yeah.
And like you can only appreciate and be grateful for the things after going through war, going through hell, going through shit that you're like, I don't understand here. Like, why does this keep happening? Like, you're getting hit with 10, 15, 20, $30,000 repairs, bills, boilers breaking, tenants not paying. You're sitting here like, I think I'm a good person. Like, I think I did everything the right way.
Yeah.
Like, did they care that I gave them a $100 gift card? Like, and they're going to not pay my rent this month? Like, I did right by them. You know, you start having those conversations with yourself. Like, but at the end of the day, if you figure out why you did something, like what your intention was behind it, I found that the best decisions that I've made, I've had the most pure intentions in.
Right.
And sometimes they don't go the right way. But then I started telling myself, hey, like, take the lesson from this. Where could I have done things differently?
Yep.
Like, did I speculate maybe too much on this opportunity? Did I ignore like my gut of telling me like stick to what you know? But again, you know, your experiences make you more valuable, good or bad.
And I feel like we got to close it up too. We're running out of time, but that's where I'll leave it. I mean, the people that have the self-awareness to look at anything that's happening in their world is because of something that they did.
100% accountability.
It all points back to nobody owes you anything.
Yeah.
Your clients don't owe you anything.
I have some people that owe me some things. I got proof, I got documents, I got signed documents.
I'm talking about from a sales aspect of things.
Right.
So nobody, like if a client works with another real estate agent, you dropped the ball somewhere.
Your
You
fault.
did something wrong somewhere.
It's a really good point. It's a really good
And
point.
same with the loans or whatever it may be. I mean, obviously rates, things like that are outside
No, but you're
your
right.
control.
Having the self-awareness, you hit that on the head.
But it all points back to, you know, what can you do different and what can you do different. And actually, people who owe you stuff, looking forward through that, maybe you won't do whatever you did that makes somebody owe you something.
I'm with you on that. If I don't see any posts related
You
to that.
screwed up by doing something with those people.
Absolutely. You know who not to deal with.
Yep, totally. Well, guys, I really appreciate you guys
Thanks
coming
for
on.
having
I feel
us.
like I could, we could rap for 8 hours straight. So, any closing thoughts or?
No, I think we got it. I think we got it all. I got a couple of gems I'll use on my own now today.
You're Debug on Instagram, right?
Debug, yeah.
And social media, DiBugnara. And what are you?
Jeff VanNote, SR.
Like, no more mortgage quarterback.
No, I had to do away with that. It was boxing.
This
me
is the
in too much.
reinventing. Yeah. This is it.
Yeah, took a couple blindside hits, and the mortgage quarterback went on the sideline.
He's above it.
Came back as a GM.
He's above it.
Player coach.
He signs the
Player
checks
coach.
now.
Tom Brady. I'm like Tom Brady in the mortgage business, you know?
Awesome, guys. I appreciate it. Thanks so much for tuning in.
Thank you, guys.
Thank you.